Today we wanted to cover the topic of options expiration and specifically the quarterly expirations. Now, if you're a follower of SpotGamma, you know that we have covered this topic at length, probably hundreds of different articles and videos about this. And the discussions around the market weakness on Monday kind of shine some light on the fact that many people are ignorant to this expiration event. And for those of you who are maybe new to this topic, generally what happens is there are very large options positions, typically puts, that are tied to these quarterly expirations. And when those options expire, the flow that hedges these big options positions needs to be unwound. And so what we'll typically see is weakness into that quarterly expiration. And then the Monday after that expiration, you will see the markets put in a low, and then we'll get a short cover rally. Now, this is something we talked about at length, even this specific December expiration. You can see some videos on our YouTube channel about that and a lot of articles that we posted on our website. But what we really wanted to show here is some data that backs this up. So first, we wanted to show a tweet by Steve Sosnick, who is an options veteran. And what he posted here is the performance of the S&P in 2020 and 2021 for those quarterly expirations. Now, this is during the time of a massive rally in markets, and you can see here that all of the point changes, that is all of the percent changes, all of the change in the S&P tied to the expiration, around that expiration, it's all negative. And this is in the context of a very positive market. Now, again, the Monday after the expiration, you'll see a low put in and a rally. This is something that's happened over and over and over again. Now, this is also not just in the past year or two. We want to show you this chart of the S&P 500, and you're going to notice down here there are two red arrows. Now, these two red arrows are after major declines in the market. This is December of 2018 and March of 2020. And what you will note there is that the low of those markets, respectively, were the Monday after quarterly expiration. So there's the December 2018 quarterly expiration and the March of 2020 quarterly expiration. Big put positions roll off. Market makers can cover shorts. And this is not just in the S&P 500. This is also in some single stocks, which we'll touch on in a second. So this is a dynamic that is always in play. And what's so interesting to us about this is that you will see narratives coming in the market. Now, on Monday, it was, Omicron or the Fed, which, last week may have or may have not guided the markets to stronger taper or faster rate change, whatever it may be. And then even Build Back Better. Manchin said that he couldn't back the plan as is. And so on Monday, everyone was saying, look, we knew it. We warned everybody. And they all seem to ignore the fact that this is an options expiration, and the normal flow is weakness into expiration with a low on Monday and then a short cover rally. And so what really kind of prompted us to create this video were some comments by Joe Biden yesterday. He was answering some questions after his sort of COVID response speech, and we just wanted to give a pause here and have you listen to what he had to say.
What happened? Goldman Sachs and others said, if we don't pass Build Back Better, we're in trouble because it's going to grow the economy. And without it, we're not going to grow. And what happened? Stock prices went way down.
Notice there, stock market
took a real dip. If you take a
Now, what's so funny about that is that he's talking on Tuesday, and this is the Tuesday follows the Monday after expiration. And so if we just sort of zoom in on those 5 days, you can see that he's giving his speech yesterday in the context of a rally, and this is the dip that he's talking. We're about 60 handles from all-time highs in the S&P 500. So, this is just the optics dynamic. There's not actually a big sell-off in the market because of anything. And people want to provide narratives that they can point to and say, see, this is why the market is moving how it is. And they fail to understand or acknowledge the fact that options expiration has such a big impact on markets. Now, as I mentioned before, this is not just something that you see in the S&P 500 itself. It's something that shows up in single stocks. Now, we put a couple videos forward on this, specifically Tesla that you can see here. We did this video yesterday afternoon, and then we also talked about on Friday the fact that Disney, AMC, PayPal, and some others had some pretty big expirations as well, put heavy expirations, we call them. And the idea there being that bigger put positions could lead to sharper rallies in these stocks. And so it's interesting if we kind of flip over. And so it's interesting if we flip over to a current chart, you can see here that this is the expiration where everything is fairly tightly coiled. And then you can see what happens is that Tesla obviously has the strongest performance, but all of these stocks, the ones that we talked about, Tesla, PayPal, Disney, they're all outperforming the spiders here. Now, obviously, they all have very good performance. They're all positive over the last 3 days, but you can see that these names that are a little bit put heavier, quote unquote, are having stronger performance than the S&P 500. And we think that's, again, because there are bigger put positions in those stocks that led to rally. Now, with that, we note that there is still one decently sized expiration here for the rest of the year, and that is on 12/31. There is the infamous JP Morgan collar hedge. So that talk around that is likely to come up. We've done a lot of posts around that trade specifically and that type of flow, and we'll put a link to that in the descriptions. So we hope that helps to explain a little bit around the options expiration and its impact on markets. If some of the concepts that we mentioned are new to you, be it anything from what is a put and call all the way up to the more advanced concepts of gamma, Vanna, and Charm, we've launched a new course. It's called the SpotGamma Academy. You can head over to academy.spotgamma.com. There's a couple of different levels of courses, but basically you can get everything from the basics of options, and we'll lead you all the way through how to trade around some of those advanced options metrics. The instructor for the course is my friend Imran, who has 20 years of experience in options. He's a fantastic instructor, and we can't recommend the course highly enough. So with that, if you have any questions, please put them in the comment section below or send us an email at info@spotgamma.com.